Hello guys, in today's videos I'm going to tell you and teach you what is fair value gap and inverse fair value gap and how you can trade them. So firstly let me explain what is fair value gap. So fair value gap is formed by a three candle, and it is area between them. So in this case we have three bullish candles, and it's a good move, strong move. So how we can draw them? So we can draw them simply with first candle's high, this high, and the third candle's low, this low. So and we have to mark with this like this. So it will be bullish fair value gap. Okay, let me mark like this. So and after that, whenever it comes to this zone, it's gonna explode then. That's the scenario of the fair value gap. So for the bearish movements, we still have three candles, and we have to draw rectangle the same way we draw for the bullish movement. So the first candle's low and the third candle's high, like this. So whenever market taps in this fair value gap, then it's gonna come and reverse. So what is inverse fair value gap? Let me tell you this scenario. So we have still three bullish candles, and inverse fair value gap is drawn as same as fair value gap. First candle's high and the third candle's low, same as we draw before. It's bullish fair value gap, but there is one difference from fair value gap. Let me So we said that fair value gap is when market tapped and then expand. So in the inverse fair value gap scenario, we are looking for market to break the fair value gap, and after this break, and the candle will close below this this fair value gap, below this fair value gap, it's already inverse fair value gap. So how we can trade them? So after it break, and it may tap, and we can look for a short. So for bearish movement and bearish fair value gap, we can still do the same. First candle's low and the third candle's high. We draw a rectangle, and it's bearish rectangle. So what we're expecting is, when we said for fair value gap that it will tap in then expand, for inverse fair value gap it must break this fair value gap, bearish fair value gap, then retest and then expand higher. So that's how fair value gap and inverse fair value gap works. So let me show last day's example where I trade also and got good setup. So it was this trade. So how I entered this trade? For me, my strategy is first step is to draw daily open. So for me, let me delete this. So for me, daily open in my country is 7 a.m. here. So what I did, my strategy is like that. I'm waiting for movements before daily open, and after that I'm going to decide either I buy or sell. So on 5 minutes time frame, there was good bullish candles. Let me show on 1 minute time frame. It was crazy how these movements were performing. So it started to went up, Oh damn, where was it? So first what I did, draw inverse fair value gap. We had inverse fair value gap before. I did not film that before that, but I will show. So we also had this liquidity strip, and I was expecting price to make higher high, higher low, and then we will go to enter a trade. So what we did, it tapped in this liquidity area in fair value gap, inverse fair value gap I mean, and after that I went on 5-minute time frame and waiting price to break or give me break of structure. So it gave me break of structure, and I was expecting price to drop then, and then I will enter. So on 50-minute time frame, and this is the moment where our fair value gap comes. So we had these bullish fair value gaps, and also you see that it broke this recent high, and also with big movements. That's what I'm looking for, and it became, I mean, okay, it became fair value gap. So I was waiting price to reject this fair value gap, I mean jump and give me some good candle to enter. So on 5-minute time frame, I checked 5-minute time frame, there was this breakdown movement, so I was expecting that it may break this fair value gap, but it may not. So after this happening and then pull back, it reject this area, and also there was a liquidity strip down here. I open trade here because of the big rejection. I put my stop loss below this fair value gap. It may want to retest these or take some liquidities, and I target this high. So why I target this high? Because I did not want it to make my trade so long. I mean, I did not have time. Also, I was to go somewhere. So it took only, I mean, 27 minutes. Not bad and not good too, but that's how trading works. So why I target this high and not these highs, or I will tell you. So we had two highs. First high was here, and the second high was here. But probably it wasn't going to reverse from this high because there was nothing to enter, anyone to enter. So I target this high. This high was like nonsense for me. So why I target this high? Because here was also a fair value gap, bearish fair value gap, which may work and which may lead to reverse from this liquidity strip. So I just didn't want to risk my trade because it went so good. So I mean, it's hit perfectly, tapped in my take profit and gave me that fine, I mean, trade. So next step is bearish fair value gap. This scenario was yesterday's trade recap. So okay, I found one. So we're looking for this scenario. First, I want to mark my zone, not to lose it. So we see that there was big down movements, and crazy movements, and it is a reason, and it is going to be a reason why I'm going to looking for short. So after this liquidity was swept, it started to make lower high, lower low, and lower high and lower low. So also there was change of chart there, and after the next candle there is bearish fair value gap. So let's draw fair value gap really quick. So I mean, price rejected it, so it's good to see that it went back here and then pushed down. I mean, I don't recommend to put your take profits too low, I mean here or here. That's not how fair value gap works. So the max you can put your take profit was here. I mean, don't put any further. So now let me show inverse fair value gap scenario. I mean, oh, we have there. So price swept this liquidity and rejected it like crazy. So what we have here, we have fair value gap, bullish fair value gap, and I need to tell you something about it. Many people just enters fair value gap when it's performed already. I mean, if it's formed and when it's touched the fair value gap, the candle, they are entering immediately. So that's why many people lose. So after we need to have another confirmation to enter. So in this scenario, we have bullish fair value gap, and probably you can see it rejected and went all the way down, broke the bullish fair value gap. So what it's called now, it's called inverse fair value gap. So what we are looking for, I already told you, we are waiting for pullback, then we are going to look for shorts. So you probably see that pullback. I mean, many people will need to get another confirmation, like broke this high, I mean this low, and then pull back in this fair value gap or something like that. But we don't need that much. So after this fair value gap, inverse fair value gap was touched, we can just enter because of this week. So we can enter from here. We can probably push our stop loss somewhere around here, because we have also this bullish fair value gap, bearish fair value gap. So, and we can target this high, this low. I mean, what? Oh my God, why are saying opposite side? I don't know. Sorry. We can catch this low. So that was inverse fair value gap. So I mean, let me show you another example of inverse fair value gap. I mean, where we could see it probably. Okay, we can just look at this big ass candle. It swept liquidity, so many people's stop loss was stopped out. And what we are looking for is this big ass bullish fair value gap that was formed after maybe there was news. That's why it's so big thing. So after that, what we are looking for is the confirmation it will go up or just broke and retest and go down. So it broke here, close below it, and then retest. So what we are looking for, retest, close candle, and then we enter a trade. We put our stop loss above this inverse fair value gap, and we target, I mean, we can target not this is too much. I mean, we can just target here, or yeah, probably it would be good. I mean, it's still good because there was also a fair value gap that must be taken. So we just can put our stop loss somewhere around here. And I mean, 1:68 ratio is good, quite good to be profitable. So that was series for fair value gap and inverse fair value gap, and I'm going to make another video for order blocks or liquidities or another stuff. You know, I'm going to show everything I know and everything I use for daily trades. So thanks for watching, and I'm going to see you next video.